Over the last 12 months, I've received hundreds of emails, probably thousands of emails from traders loving my support and resistance training. It has changed a lot of your lives. I've received literally messages from smart money concept traders, institutional traders, saying that the way I teach support and resistance in such a basic, simple way has changed their trading massively. And you know what? I absolutely love it. Now, I've decided to do some support and resistance training exclusively for Cam, the TradingNut. I started doing some videos last week and I was talking to him about it on when they're going to go live. And he said that the videos need to be between 7 and 10 minutes long because after 10 minutes, you lot get bored. And the video was actually 20 minutes long. So I've decided I've got to redo the videos. So I'm going to do a 3-part series exclusive for the TradingNut. I will let you know very soon when they go live. However, this video here that I'm about to show you was a video. It was 20 minutes long and I was going to upload it to TradingNut like I said, but it was too long and I thought it would be a waste to just delete it. So I'm going to put it on my channel, and this is an in-depth analysis on how I trade support and resistance. So I hope you enjoy. Today's video is sponsored by Go Markets. Go Markets is a multi-award-winning broker who is regulated by the Cyprus Security and Exchange Commission. I have personally been using Go Markets for over 5 years now, and one of the reasons I chose them was because their customer service is second to none. Low spreads, fast withdrawals and thousands of tradable products makes Go Markets the favourable choice for the BD members. Go Markets is the official online trading sponsor of Chelsea Football Club. If you are looking to trade with a worldwide trusted and regulated broker, then sign up using our link below and start trading today with low spreads. Thank you and enjoy today's video. Everything in trading starts with a reason why we are taking a specific trade. If you're an institutional trader or retail trader, everything starts with a reason. If you are perhaps an institutional trader, the reason why you might be taking a specific trade could be based around what's going on in the economy. Perhaps the pound is getting weak and the pound is going to drop. Well, the reason why you are selling the pound is because the economy is weak. When we are trading support and resistance, we also have to have that reason. And the reason is based on static support and resistance. So there are two kinds of support and resistance levels. Well, I call two kinds of support and resistance levels: a static support and resistance and an active support and resistance. So let's just quickly go over the difference and why both are equally important. So static support and resistance is support and resistance where just price sits there. Okay, so you've got this imaginary line and price has bounced off it in the past like this here, and price is doing like this here, and then eventually price comes up. Let me just go there, and eventually price comes back up to this line. I call this static support and resistance. It's just sitting there. It's not doing anything. It's just sitting there. So to give you an example of that here, we have a good example of that on EURUSD on the daily time frame. So as you can see here, we have this level of resistance here. It's not doing anything, it's just sitting there. And as price comes up to it, you will get something like this. So this is classed as static support and resistance. If we go to the 1 hour now, what we have is active support and resistance. So this is support and resistance that is happening right now on the charts. And it normally does not get respected further down the line. It's just what is happening now on the chart. So to give you an example here, if I find you one, there's many on here, but just to give you an example here, we have potentially a resistance here. Okay, that resistance gets broken, and what do we have? We have a retouch of this level. So this here would be classed as active support and resistance. So it's happening now. Okay, so can you understand the difference between active as it's happening now and static as in it is just sitting there doing nothing? As price comes up to it, then price would reject from it or either break through it. So this is classed as static support and resistance. And when we are trading, especially support and resistance, everything starts with static support and resistance. What we have to do is when we are trading support and resistance is we have to look at the higher time frames. Now, I'm not going to deep dive into higher time frames, which time frames work best, because at the end of the day, price is fractional. It's going to work on all time frames. What I would suggest you do is when you are trading is pick a time frame that you want to place your trades on, whether that's the 1 minute, 5 minute, 15 minute, 1 hour. Okay, pick a time frame that you want to place your trades on. Once you've done that, then pick 2 time frames higher than that to draw your support and resistance on. So to give an example here, we're going to be using the daily and 1 hour to mark up our support and resistance levels, and then we will perhaps use the 5 or 15 minutes to place our trades on. We would use our strategy. Now we'll cover the strategy part in video 3, but in this video we're going to tell you about which support and resistance you should be marking up. Now in trading there is a kind of big confusion about how to draw your support and resistance. Okay, now the best support and resistance and the ones that work are the ones that you can see on your charts now. Okay, if we just focus on this one here, we can see it on the charts right now. Okay, if I just mark up one here, okay, and if I mark up is there one there? No, there's not one there. Oh, my webcam doesn't move. I could probably draw one, just try and find you another one. Here we go here. So these here are support and resistance that we can see on our charts right now. And those are the levels we should be looking at. If you have to go back to last week or the week before, you do not want to draw your support and resistance like that at all. It is the wrong way to trade. The reason being is because if I just get a random line and I stop it there, so I've just put a random line on my charts. If we go back, okay, eventually, look, you see, this imaginary line that I've just drawn has been respected. There, and I'm sure if I go back, look here as well, nice little touch. And then again, that is just a random line with a random results. I've gone back as far as I can find to try and find a reason why this support and resistance would hold, this random line that I put on my charts. And that is the wrong way to trade, because it is a random line and you'll get random results. What you want to do is you want to look at the charts like this here, and if you can see support and resistance on your charts right now, that is enough. That's all you need to do. You do not want to look what happened last week on the charts, because what happened last week happened last week. You know, price could be in a downtrend last week and now we're in an uptrend. It's completely different. Last week everyone was selling, this week everybody's buying. So support and resistance is going to be completely the opposite. Now what we learned in video 1 was about identifying the right levels. If price is in an uptrend, you have to remember that resistance is going to get broken. Okay, so resistance, resistance, resistance. And what will get held is support. So resistance gets broken, support gets held. Resistance gets broken, support gets held, and vice versa. And if this was a downtrend, obviously resistance will get held, support will get broken. So support will get broken, resistance will get held, and vice versa. So this is why you can't go back in time and mark up support and resistance, because at any given time, last week it could be in an uptrend where resistance is getting broken, support's getting held, and then this week it could be the opposite. It could be an uptrend or downtrend, support's getting held, resistance getting broken. So that's why you only want to draw support and resistance on the charts, okay, if you can see it in front of you. That is the most important part. So let's just mark up, and I want to break down this particular example here, okay? So as you can see, we have static resistance. So I've gone to the daily time frame and I've marked up an area of resistance. Okay, this is an area of interest. It doesn't mean I'm going to sell from this level. It just means it's an area of interest. Now this area of interest on the daily, it could be on the 1 hour, the 4 hour, the 15 minutes, whatever time frame you want to do your analysis on. I'm just picking the daily just to show you. Doesn't mean you have to do exactly what I'm doing. I'm just showing you the core principles. So as price comes up to this daily time frame here, okay, and I just go to here and you see how we have a rejection here. Now a lot of traders would go, oh well, look, we've got a resistance area here on the daily, I'm going to take a sell trade. You do not want to take a sell trade here. As soon as price comes up to this level, you want to go to the 1 hour now. Okay, and again, if you're on a different time frame, you would start off on the higher time frame, go down. So to give an example here, we want to place our trades on the 5-minute time frame. We would look at our static resistance and support on the 1 hour. As soon as price comes to this level, we would then go down to the 15 minutes and look for active support and resistance. Once that has been met, we then go down to the 5 minutes to place our trades. Okay, so again, we're doing this on the daily to look for our static support and resistance. We then go down to the 1 hour to look for our active support and resistance, and then we would go down to perhaps the 5 or 15 to place our trades, load up our strategy. So once price has come to our daily resistance, I then want to start to mark up the active support and resistance. Okay, what do I mean by active? I want to mark up all the highs and lows in the market like this here. Okay, so you can see here price, I'll just do it a little bit better. Price trends up, price pulls back, price trends up, price pulls back, price trends up, price pulls back, price trends up. Okay, so we're making higher highs and we're making higher lows. Okay, so I want to start to mark up the previous high and the previous low. So there is the previous high and this is the previous low. So these are static support and resistance. As you will see here, because price is in an uptrend, what you will find is that obviously resistance is going to get broken, support will get held. So this resistance level here eventually got broken. Then price came down, retouched it, and support got hold. Again, this resistance gets broken, and just here we have a break and retouch. See that just there, ever so slightly. If I zoom in, you might be able to just see that level, so that break and retouch. So again, support is being held, resistance is being broken here because this is an uptrend. However, if we're coming up to a daily resistance, then we should be coming down. However, think logically, if price is coming down, what's going to happen? Then support is going to be broken, resistance will get held. Again, support will get broken, resistance will get held. So that's what I want to start to see on the 1 hour charts. If we do not get that, everything that is happening now is going to be manipulated. Well, it's not really manipulated, it's how the market moves, but you lot would call it manipulated if you don't understand it. So let's say you take a sell trade just here, right? And you take a sell just here. What's going to happen is simply this is going to happen. Bang, you're going to get stopped out. The reason why you got stopped out is because you've entered too early. So this is where traders will say, oh, price got manipulated. If you go back to the 1 minute, 1 hour look, it was telling me to sell because we got a rejection wick. But what actually happened was manipulation. No, you've entered too early. I'll tell you exactly where you should be taking this trade. So again, we have now, and keep an eye on it. Again, if I just zoom in again, so now we've got that fake manipulation, if that's what you want to call it. And we've got our new trend up and pullback. So again, we've got our uptrend, pullback, support gets held, resistance gets broken, pullback, support gets held, price trends up, price pulls down here, support gets held. So again, we're still going into an uptrend. Okay, you can see here, support is still being held. So what I want to start to see now is I want to see if this is going to go down, is I want to see either this support get broken, this support get broken as well. So again, I'm just going to mark up the high and I'm going to mark up the low, okay? And I want to see what happens as price starts to come up to this level. Okay, so price has now come down and I'm interested to see what happens. Again, you see how that support is being held? See how that support's getting held? So resistance got broken, it's now become support, and there is still no confirmation for a sell. This is technically still an uptrend. So you could still be buying at this level because it's still doing exactly what it should be doing. Breaking resistance, support getting held. As price starts to come down now, okay, we can see our first support line has been broken. So this is now the low. I'm just going to mark up here because that's the previous high. That's the previous low. I really want to see this low now being broken to confirm we're going into a downtrend. Because obviously, if we're doing the opposite, support will get broken, resistance will get held. So there's the resistance, there's the support. Let's see what happens. Okay. We now looks like the resistance here has just been held. You see the resistance has just been held. Now, does this support get broken? That's the most important part now. We are starting to get a change in character. So let's see what happens. Okay, we come back down and see here how we retouch this level. See here? This here would be exactly where you start to sell the market. Just here is where you sell the market because we have a perfect break and retouch of this support line. So this support, now resistance, is the perfect opportunity to sell the market. Like everything in your favor now is going to tell you this trade's going to win. Everything, right? Everything's lining up. If you look at the daily, we have got a rejection wick. If you look at the 1 hour, we've got a lower low. If I just mark up the low, so low, previous low, previous high, perhaps the previous high before that, everything's telling us to sell. Now, this is still not a valid confirmation to enter a trade because, again, you can say that this is going to be manipulated. Why? Why could this potentially be manipulated? Okay, look at it from a logical point of view now. If price is in a downtrend, it's going to do this. Okay, you're going to get a trend down, you're going to get a pullback, you're going to get a trend down, you're going to get a pullback, you're going to get a trend down. If we look at this here, we've got the low, and we've got the new low here being formed. So as you can see currently at the minute, we have got a low and we've got a previous low here. So everything's potentially telling us to sell. However, we've only got a high. We need a lower high. So ideally, we need to see this level here being respected because again, if we just figure out why I've marked this level, that's the previous high, this is the previous low. Okay, so let's see what happens here. Let's see what happens. Okay, so we reject from that level, but again, we would not want to sell here. This is not a selling opportunity, and again, if you sell here, you might get trapped out because we haven't actually confirmed a lower high. So let's see what happens. Okay, let's see what happens at this point. Okay, we come back up here. Now, normally, okay, this is going to be interesting because if I just bring this up here, okay, we've now just formed the new high and the low in the market. Okay, so again, I just want to draw it like this here. We've got the previous high, we've got the low. Now look what's happened here. Price is kind of chopped around for a bit here. It's come down. It's created the low, which is here. But what we need is the lower high. Okay, so I'm going to mark up this area here and that becomes the lower high. So just to show you, as price comes down, price pulls back, price comes down here. Okay, you've got the low, you've got the low here. That's the previous high. That's the previous high before that one. Does that make sense? Yeah. So that's the previous high. That's the previous high. This is the previous low. This is the new low. So what I want to do is realistically, this is where the institutions would sell. The institutions would sell here. Okay, the reason being is because I talked about this in a previous video about getting in at a better price. Because we've marked up the lows and the previous low, we've got a pretty much an 80% chance that price is going to come down. But until we pop that lower high, we haven't actually 100% confirmed it's coming down. Now, you could take a sell trade at this level here because you're getting in at a better price. But what I tend to say to traders is, yes, entering here is a better place to enter. However, sometimes you see how you start to get this manipulation here. What I would tend to wait for is something like this here, a retouch of this level. So see here now, if we just follow price, uptrend, pull back, uptrend. Wait, hang on here. It looks like we're coming down. We've popped the low. We've got the previous low, if you want to count this one as well. Whatever, this low here is definitely lower than this one and this one. Okay, so if we popped a low, I'm looking for a lower high. Oh, look, there's my lower high here. It's lower than this one. It's lower than that one. If I just mark it with a circle, it's going to make a lot of sense. So you got the low, you got the previous low. If you want to count this one as well, it doesn't matter. This one is definitely lower than these two. And then you've got the lower high. Great. We've now got a 100% confirmation we are going down. So as soon as we retouch this level here, bang, look at that. This is the perfect this here is the resistance area that you want to sell from. So what happens here is literally price will probably drop. I don't know if it's going to happen. Yes, look, see? You see how price starts to drop at this level? Bang. And then same again. We've got the same opportunity. If I just show you here, let me see what happens here. Yep, same again. So if we go back to here, we have the same opportunity. So keep an eye on these two scenarios here. So as price starts to come down, obviously we took a sell trade at this break and retouch. Price comes down here, price pulls back. So same again, we would suspect if price is in a downtrend that support's going to be broken, resistance is going to be held. Okay, so there would be the support line here because that's the previous low. This is the previous high. Okay, so whatever's going to happen here, one of these resistance areas, this resistance or this resistance, is going to hold price. You have to remember this again from a logical point of view. Okay, we're going to get rid of these resistance areas there because that's the past now. It's done. That is now inactive. Okay, these here are the two active support resistance areas. Okay, now again, you have to look at this from both an institutional level. The best place to sell this downtrend would be where? Would it be here or would it be there? Which is the best place to sell? Obviously here, this would be the best place to sell. Why? Because if price is in a downtrend, we're getting in at a better price, aren't we? Okay, so the more price comes up, the better price we're getting in to sell it back down. So retail would sell here and institutions will probably sell here, but you can't necessarily just wait for this resistance to be touched because most of the time it won't. Okay, institutions, when they play their hand, they rarely play their hand, but when they do, then they will probably enter at this level. So what I tend to say is I will take a trade here at this level or here, but depending what the market does. So let's see what actually happens here. Now I know kind of what happens because you've seen me wind it back. But as price touches this level here, a lot of traders will go, oh, break and retouch. This is the perfect sell because, again, we've marked up the previous low. There's the previous low, 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 lower high, perhaps the lower high as well. Even if price comes up to this level, this is still a lower high. Again, you know, it's telling us to sell. This is a really good example because price has chopped around for a bit. It's a bit messy, but if you can actually just filter out the lows and the highs, it makes logical sense. It's just keeping it simple. Support and resistance, lower lows, lower highs, break and retouch. That's it. You know, it doesn't need to be more complicated than that. Now, as price comes up to here, you could take a sell trade here. You could take a sell trade here. You could put your stop loss above here just to be careful in case institutions decide to push price here and then drop it. You know, so you could put a stop loss here of around 15 pips. You could target all the way down here, or you could put a tight stop loss here and win the trade. So, I mean, I'm not going to do that. We'll cover it in the next video. But just to give you here, if you put a tight stop loss of, I don't know, a 7 pip stop loss, you're getting about a 30 pip take profit. So that is a 1 to 3 in and out in one candlestick. Okay. If you want to target a bit more, maybe you see here how price comes back up. You get a second rejection wick. So this here is going to be interesting because here is where liquidity is starting to build now. All the retail start to sell. Now this is going to be, when you see this, right? Think about it logically. Again, you know that retail are selling here. Now we already banked 1 to 3 on this trade. but obviously I will show you how to swing trade in a minute. So here you would have got a 1 to 3. Now all this liquidity is building up. The institutions see this now and they think, great, I want to take that because I want to take it down, but I want price to be here. This is where I want to sell. I want to take out liquidity and I will sell here. Now again, if you had a tight stop loss here, you would have got 1 to 3. If you put your stop loss up here, you're still in the trade, right? What happens here? Look what happens. Price comes straight up to this level. Bang, look at that. That's where the institutions sell, and that is why I wound it forward, because look how much price drops from this level. Look, that is where the institutions sell. And again, even if you put your stop loss out of the way, it's protected. We're not getting manipulated. We know where the banks are selling. We know where the retailers are selling. Whatever happens here, we can either, we're either going to make money here on a 1 to 3, or we're putting a wider stop loss to protect ourselves in case institutions want to play their hand. And if they do, I'll just sell at this level as well. So that is a real deep dive into support and resistance. Just to rewind, everything starts with a reason. So when you join support and resistance, look for static support and resistance on the higher time frames. Once you get that, scale it down to the lower time frames and start to look for active support and resistance. The important part is, first of all, identify what is being broken, support or resistance, because that's going to tell you whether it's going into an uptrend or downtrend. Once you get a change of character, so like here you start to get lower lows and lower highs, what you then want to do is wait for 3 confirmations: the lower low, the lower high, the lower low. Okay, because that's going to tell us that price is, yes, creating lower lows and lower highs. You can't have, and I see this sometimes, you can't have price making a lower low. I'll give you an example here. So uptrend, 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 lower low, lower high. That's not going to work, okay, because that's a conflict of interest. You've got a lower low and you've got a lower high. Well, what is this? It can't be an uptrend because it's created a lower low, and it can't be a downtrend because it's created a lower high. So what you actually have here is a conflict of interest. This is where manipulation happens, because you just get something like this here. Everyone that sells gets stopped out by the buys, and you have to wait for that certain break and retouch, that certain lower low and lower high. So I hope you enjoyed that deep dive into support and resistance. What we will do in video 3 is we'll start to scale it further down to the lower time frames and start to introduce a strategy on which we can use some tight stop losses, big risk rewards, and make some big gains with big high win ratios using this. So I hope you enjoyed that video on support and resistance. Now unfortunately there's not going to be a video 3. I made video 1, video 2, and then I reached out to Cam and he said that the videos are too long, you need to cut them down. So unfortunately, there is no video 3. That is going to be the end of it. However, very soon, probably in the next few weeks, I will be releasing an exclusive support and resistance video series for Cam on the TradingNut channel. So do look out for that. I hope you enjoyed today's video. My name is Jamie Palmer, and thank you for watching.